This is Michael Fox, and this is the Prospector News Podcast. And joining me today, we have the founder of Safe Canadian Mining, Terry Lynch. Welcome aboard, Terry.
Hey, Michael, great to be here. How are you this morning?
I'm doing very well this morning. So for those listeners who are not aware of your organization, let's give them a good overview of what it is that you're doing and what you're trying to accomplish.
Yeah, I mean, basically what Safe Canadian Mining is all about is trying to stop predatory short selling in the mining sector. I mean, we believe it should be stopped everywhere, but we're obviously in the mining business, so that's what we're first starting on, and it's very prevalent in the sector, and it's easy. We're easy pickings because junior miners, their drill programs are very well established. Their balance sheets are obviously publicly transparent, so you can do the math. And it used to be back in the day, when before I would say the tick test was removed. If you had good drill results, stocks went up, and you got financed at a higher level. And then if you had bad results, stocks went down, and maybe you didn't get financed at all. That's the way it should work. It's called capitalism. It's not happening right now. We need to change it.
Yeah, I'm not disagreeing with you. So you tossed out a couple of terms there, and let's delve into them. What is predatory short selling?
So short selling, in my mind, is just the opposite side of a bet. Like in terms of if you're investing in a company and you believe in it, you buy the stock. If you don't believe in it, theoretically, you could short the stocks. Which means if you did it legitimately, you would borrow the stock, you would qualify the share as a short sale when you actually make the trade, and you would end up listed on the short report. That's fine. We're not against short selling. That's just taking the opposite side of the trade, and God bless. That's capitalism too. What happens with predatory short selling is they don't declare it's a short. They just sell. They don't have a borrow. And they basically, the market just sees the selling activity and thinks, hey, a bunch of shareholders are getting out of this stock. Maybe I should too. And so what happens is these guys force a stock down, and then they'll come in often with the financing to the company and cover their position, make a profit, and take a warrant on the upside. This happens all the time in the Canadian capital markets, and it's really destroyed them.
Now, you used another term in your original discussion. You said the uptick rule. Explain what the uptick rule used to be.
So up until 2012, all the stock exchanges around the world had a uptick rule, which basically meant that if you wanted to short a stock had to be going up. The reason for that was, generally speaking, why were stock markets created? Well, they created for two reasons. One, to allow companies to access a broader pool of capital. Second, to allow investors to access a broader pool of investments. It wasn't invented to make investment banks or hedge funds wealthy, transacting with predatory practices. So this is what's been missing in the last while. We've gotten away from what is true capitalism, and we need to get back to it.
Fully agree. My position has always been that if it's trading on a venture exchange, it shouldn't be allowed to be shorted anyways. You've had a nice rebuttal to that. We'll address that a little bit further down the road, but there's been some good news on that front for a change in the last 30 days. Can you tell us how the rules are changing?
Well, I mean, IROC put out I would say a clarification just to clarify that, naked short selling was unlawful. And they, advised the investment banks to be watching for this, and that it was definitely not allowed. So it was a clarification. I think it was something that was always the case, but they made it very clear, and they sort of put the onus on the investment banks to be much more aware of the situation and to be more proactive with the policing it. So in my mind, they're basically saying, hey, possibly the lawsuits that could be coming, they don't want it on IROC, they want it on the investment banks. So I think that's sort of where that was intended. And I think it definitely puts the onus on the investment banks to be much more compliant in that respect, that they, in my view, have not been compliant and have been willfully looking the other way. So that's unfortunate, and hopefully this will put more pressure on. I think the next step has to happen is that you basically have to gather the evidence, the companies themselves, and actually present it to the compliance department of these investment banks and say, hey, here's the evidence of this, predatory short selling that's happening in your company, and you need to stop it. And if you don't, now all of a sudden you've been warned, you've been advised. IROC has said it's illegal. If you don't take action, then obviously you're going to be subject to legal jeopardy and all sorts of issues. So I think that's where it's got to go next for the companies. And we, in fact, my own company, Power Nickel, will be, we're gathering the evidence to show that in our case, and hopefully that works for us, and it can be a recipe for other companies to use as we go forward.
In a situation like that, what would restitution end up looking like?
That's really hard to say, Michael. I mean, the most important thing really is just to get these guys out of your market, to get people to cover, so you get back to having a legitimate market where you have buyers and sellers, and they find their balance around a price point. So that's the biggest restitution, is just normalizing a normal market. Then obviously, to the extent that one could quantify penalties, there'd be some potential to sue them for that. And certainly you're seeing, that in the US, they're getting more active in that respect. But we did a podcast with Wes Christian, who is like the leading litigator in the short space. He's won several lawsuits against the very biggest investment banks in the world, from Goldman Sachs down to JP Morgan, and all the way through, and in the sort of high eight figure range, like I think 10 or 11 now. And I talked to Wes about that, and he said, litigation is obviously something he's done successfully and it works, but it's super expensive. It's like a $2 or $3 million investment to sort of litigate that process, and he said it's time consuming, and it's they route these trades through exchanges in Lesotho and like all over. I mean, they have 60, 70 exchanges in the world wrapped in this whole washing of stock thing. I mean, you can't believe it. It sounds like something out of a conspiracy theory movie, but the reality is there it is. And Wall Street Bets was sort of the public personification of it. That how bad it's gotten. So we were talking this in Save Canadian Mining, a year or two before Wall Street Bets, because it's been happening here for a long time.
Yeah, there's nothing more frustrating as a shareholder when I see a perfectly good company with good results and the stock keeps going down, and there doesn't seem to be any rhyme or reason for it. And I got to think that shakes a lot of investors out of the space.
When we had Eric Sprott, who's been a big benefactor of Safe Canadian Mining, we were on an interview together, and he made the point to the host that individual investors are not stupid. They've got capital to invest in their money. They're very concerned with it, and once they start to see things are just unfair or rigged, they avoid it. And that's what's happened to our capital markets, is we've lost a lot of individual investors, and it's really sad, because now more than ever, especially in our sector, junior mining, I mean, the ridiculous values that are out there, not just saying for Power Nickel, but across the board. I know there's just tremendous values. I see it every day myself, and now would be a great time, because with the commodity cycles turning, with electrification, there's some savagely great deals out there. Yet we've got people afraid. They've been fearful now because of obviously the wars and the crypto collapses and all these things that scare investors. And then you've got this predatory short selling stuff, which is harmed our market so much. It's really kept them on the sidelines, and it's unfortunate, because potentially we're about to go on our greatest boom ever, and many people will miss it. And the big time to get into these mining stocks is when they're crushed, when they're down, because you're buying a stock at 10 cents instead of buying stock at 20 cents or 30 cents, and you get twice or three times as much stock. So it's simple math, but that's the challenge we've got. As a public company, and all the public companies, is to try and change that narrative and get people off their wallets.
Now, is the only way to deal with this civilly, or does the regulators have any teeth to their regulations to put a stop to it?
The regulators, should have the ability to stop this if they really wanted to. I mean, the challenge is hedge funds that trade these stocks short. This is not like some individual that picks up and said, "Hey, you know what? I don't like that Terry Lynch guy. I'm going to short his stock." And I phones up Bob the broker and say, "Hey, Bob, let's short, Terry stock." That's not happening. No, what happens is you got these computers that are offshore that are piped into the bank's computers, and they basically look at balance sheets and they develop algorithms and they basically develop tactics on bids and offers to muscle stocks down and trade stocks. And they basically do this like thousands of times a minute. So it's all piped in through the bank's back office, and the banks make a considerable amount of money processing this. So the challenge is, the current system for these guys is very profitable. So while the underbelly of the business, the actual money going into junior exploration is drying up, and as a result, we're not finding new mines, not creating new jobs, not doing all the things that capitalism should do. The churning of stock, for these institutions is quite profitable, and are regulators doing a good job? Answer is not nearly enough. I believe that they can do a lot more, but this is why we've been lobbying the government, like the Ontario government, because they control the Ontario Securities Commission, which is sort of in our view the most powerful securities commission in the country. And if you don't get those guys on the side, it doesn't really matter, because if you want to do something across the country, you got to start with the biggest guy first. And the Ford government is certainly open to the conversation. They've done some good things in terms of the task force that they put together to, and we Canadian Mining made a number of presentations to that. We talked about the regulatory issues and the need for further law changes in the law that they could make that would make this much tougher. And that hasn't come through yet, but we're hoping that now that election's over and they're back in power, that they'll make the changes that they suggested they would make, and they'll enforce them, because that's what we need. We need them to enforce these laws and to make sure that the transparency is out there. It's just ridiculous that we can't see the true nature of these stock markets.
Yeah, that's definite. Now, how enforceable is it if this is being done by the algorithms, computers, and those computers are offshore?
Well, I mean, you basically, if you're able to, and we believe that technology exists 1,000% to basically enforce trades. Here's what happens. Okay, when you buy a stock, you're supposed to settle in 2 days, either by, if you're buying the stock, paying your cash, you're selling the stock, delivering your security. So in Canada, you have a theoretically a bonus 10 days before it becomes a failed trade. This is the largest in the world. It's ridiculous. So what happens is these guys, before it gets marked as a failed trade, even though they didn't mark it as a short sale, they sold the stock they didn't own. Then before they don't close in 2 days, a few days later, 5 or 6, 7 days, they flip it to the next number company in the chain. They keep on moving the stock, and so the stock never gets covered. Okay, well, you can start to track these things now. We've learned, and that needs to be identified and stopped. And you basically have to have much more serious fines. So when we get these people, when we catch their malfeasance and their misbehavior, both the banks, the investment banks that allow it to happen on their trading platforms, and the perpetrator need to be really hammered with big fines, and then they'll wake up. These guys are profit machines. They only will react to pain in the pocketbook. So you got to smack them hard with fines and cut off their access to this stuff. And you do that by breaking the link with the banks. So that's what has to be done. Can be done. Takes some will to do it, but that's what needs to be done to really sort of make our markets transparent and fair for all investors.
So let's circle to my original position, which is that if a stock is trading on a venture exchange, generally those are companies that are either trying to find a mine, trying to find a new medicine, a medical device. They're not selling product to a public or business they're trying to create a product that's not yet available. And it's always been my position that those types of stocks should never be shorted, allowed to be shorted, simply because they, there isn't a real measurable value, and the value changes to the company depending on the results of their latest drill, their latest, medical study, etc. Now, you've said that that's not necessarily the way that the market should be, but if they got rid of shorting altogether, would that not solve the predatory shorting and, go in with a hatchet instead of a scalpel? So let me throw that back to you.
Yeah, sure. I mean, obviously, if you got rid of shorting altogether, that would get rid of the predatory shorting. If here's the thing, if you're a predatory short and you don't declare it, how would you know? So, see, you're assuming these guys are honest and actually declare that they're shorting, and then you'd be able to stop it because say, well, you can't short. This is not what's happening right now. See, these guys are not declaring the short. They're just selling the stock and not delivering, and then they keep on flipping it, and all that their capital is there. They have some money in the system, so that it always looks like they're on side capital wise, but they never actually complete the trade. So I don't think that just banning the shorting would stop that, because it still doesn't. They're not declaring it as a short. So until you sort of you really must make it punitive for people to not complete their trade on time. That's the number one problem. People need to be, when you make a trade, you need to complete it on time. And maybe there's some reasons, like in Europe, for example, it's T plus 2 plus 4. In other words, if you don't complete the trade in 2 days, you got a bonus 4 days. You forgot, your dog ate your homework, you forgot the stock to at home, whatever. You got some period of time where you could have reasonably, there could be some common mistake, and some, this allowance is a buffer is reasonable. Okay, that buffer works in Europe. Why couldn't it work here? And let's put teeth on it. And I think the new laws in Europe are going to be fairly strong. They're going to basically enforce that at the end of 4 days, either you've got a contract to borrow, not I believe I can borrow, not I think I can borrow, but only a legitimate contract. You either deliver the stock or you get bought in. The buy-in rules are pretty savage too. Most people have no idea. In Ontario, the buy-in rules are that if you have to be bought in for more than 10% above what you paid, you can't be forced to be bought in. I mean, these buy-in rules are like 50 years old, and they need to be changed too. So it's like, in my mind, if the buy-in if you get to the stage where you have to be bought in, you get bought in at the market, whatever the market is. And the higher the better, because the more pain these guys get, the less profit they'll have, the more losses they have, they'll get out of this business. And that's what we want. We want that money to be investing in the long side of developing businesses. I don't think there's anything wrong with short selling, because you know what? There was fraudulent behavior in a lot of junior mining and a lot of junior everything. It happens in big deals like FTX. It happens in little deals. There is fraudsters out there. Okay, so short selling helps us to identify these bullshit situations. I don't think that's necessarily a bad thing for capitalism. That can be healthy. So we're not against identifying these guys we think are not being true or honest or misrepresenting or whatever. But what we want to prevent is people taking advantage of this to willfully destroy companies and make cash out of nothing. And that's what's happened. And it's really, really destroying capitalism as we know it.
Would you say the European model is the benchmark that we should be striving for?
I think so. Yeah.
How far away from that are we?
Well, I mean, we're still with our T plus 2 plus 10, still with no serious teeth, no contract to borrow, no enforceable buy-in at any price. So we're a long ways away from what we should be.
Well, we'll have to continue the lobbying on that front.
Yeah.
The other area of mining finance that I have a bee in my bonnet over is the accredited investor program. I believe that A, it's unfair, and B, it starves company of capital in a lot of senses. I've been working in this industry for 20 plus years. I have a pretty good knowledge base of how companies work. I actually know how to read drill results. I know how to read their financial statements. And I would suggest that I'm more qualified than the majority of the accredited investors out there to look at a company, yet I'm not considered an accredited investor. And as such, it limits my participation in private placements and basically being able to buy these shares on sale. What is your organization doing to address that with regulators?
We're not really addressing it at all. I mean, we're a small, completely volunteer organization with some of the top miners in the country are supporting, but we're just not set up to handle multiple issues. I understand that issue from a personal level. I agree with you that it seems unfair to ordinary folks that they can't participate in these private placements. I mean, we have enforceable procedures against companies that misrepresent things, so they should be protected in that respect. And so why should only the rich folk get a chance to sort of do that? It doesn't seem to be ethically correct, but it's not something Save Canadian Mining is actively campaigning on. We're a very sole purpose organization trying to stop predatory short selling, and because we're not trying to make a career of this. We've got a mission to try and make some changes in the legislation and hopefully change the action and enforcement. And if that could happen, that would be a great result for us. But that's what we're trying to achieve.
Oh, that's fair enough. That's I guess that's a problem for another day. Is there anything else about the short selling that we should know about that we haven't covered?
I think we touched upon the key points, Michael. I think I would encourage people to go over to the website savecanadianmining.com, possibly consider signing up, being part of our reach team, so that when we have issues that we're advocating on, the bigger our reach, the more politicians listen to us, because we're really dealing first at the political level, trying to get governments to recognize that these changes are directly impacting our society. We're not getting the investment in the capital markets in the mining sector that we need. As a result of that, these companies are not able to hire people. Mining companies employ some of the biggest, probably about 10% of our workforce is Aboriginal. So, and our mining jobs are high paying. So we're punishing the people that we're talking about trying to support and encourage. So, these things all have an impact, and it ripples on through our economy. And right now, the world needs more of Canada's resources, and we need to finance them properly. We need to fix the system.
Agreed. And that was savecanadianmining.com?
Yes.
Are you on social media?
Yes. I think it's SC Mining, at SC Mining on Twitter.
Okay, wonderful. Thanks very much for joining me. And as we get more news on this, we'll have you back, and let's get our listeners out there signing up and being cheerleaders to this movement.
Great. Thanks very much, Michael. Have a great day.
You too, Terry. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.